Flash loans, what are they? You probably have heard about them a couple of times. You know, when this protocol gets hacked or this protocol gets hacked because of a flash loan. But are flash loans good, and how do you do them? Well, in today's sponsored video, I want to talk to you guys about Equalizer Finance. Equalizer Finance is offering flash loans made easy. Let's go ahead and dig into this protocol and see what they're looking to do. Normally in DeFi, and with any protocol, when you're trying to create a flash loan, what you need to do is you need to actually code up a contract in order to say, hey, look, I deposit here, I borrow tokens here, I pay tokens here. Just a bunch of different steps. You normally have to code that up. And that's normally a very tedious process. But with Equalizer Finance, they're making this much easier by creating a platform that's built around this. And I'll show you guys how to use this. This platform is multi-chain, so it's on Ethereum, Binance Smart Chain, Polygon, Optimism. So here's how the business model will work for Equalizer Finance. You actually have two parties involved. You have the liquidity providers, which are the people lending out ETH, Link, USDC, Uni, and multiple different tokens. And then you have the borrowers. These are the guys who are going to be borrowing the tokens in order to make different arbitrages. Here is the platform right here, so you guys can see like a quick overview of what it looks like, but it looks similar to like a Aave platform or a Compound Finance. You deposit your tokens and you can choose to withdraw them at any time. This is where the yield is coming from. If you go back onto the platform, you're sending in USDC and you receive USDC plus fees. Your interest rate is paid in the fees from the arbitrage. And these are a couple of advantages and features of Equalizer Finance. First is top gas efficiency. The gas they use is 2 times less than their competitors. I'll get into the details on their competitors so you guys can make some comparisons. There's no fees. Like, you pay no fees on Equalizer versus any of the other platforms. It's a multi-chain solution. This can be used for any token on any chain. As I showed you on the DApp, there's several tokens listed there. That's just on the Ethereum network. You can look at the other networks as well. I'll leave links in the description below. Also, the contracts on Equalizer have been audited, which is a bonus. This has been done by CertecK. So here's an overview of their competition. Equalizer has the flash loan business model. The fees are dynamic. The incentives for long-term LPs, yes, there are. Because the more profitable the borrowers are, the higher interest rate is for the lenders. It has several different tokens that are supported. It's multi-chain, and it has a governance model for the Easy token. I'll explain the token later in this video. Aave has long-term lending and borrowing. Most people lend on Aave. There's a fixed 0.09% fee for flash loans. There are no long-term incentives for LPs, and it's only on the Ethereum blockchain. Currently, Aave only does this with 24 tokens. Aave's flash loan capabilities are not multi-chain. And then we go into KeeperDAO, which is 0.15 ETH for an average borrow action. This doesn't have incentives for long-term LPs. It's only on the Ethereum blockchain, and it only has 5 tokens. I think you guys are starting to see a common theme with these. They either are only on the Ethereum blockchain, or there's very few tokens that they provide support for. And sometimes the fees are a bit higher than normal, and they also don't attract long-term LPs with higher incentives. So they have gas efficient loans, they incentivize long-term LPs, they're multi-chain, they provide support for several different tokens, and like I mentioned to you guys, they lowered their fees to 0. So they are the most competitive in the market. This is the distribution of the EQZ token. You guys can see here 20% went to the team and about 35% went to different rounds of sales. You also have 15% for yield farming, 5% for LP pools, 8% for development, 8% for research, 5% for marketing, and another 7% for TVL and rewards. Most of the team tokens are locked up, so you guys can see the different locks in the white paper. I'll leave a link in the description below so you guys can check this out. And let's go and talk about the utility for the Easy token. It gives access to several different premium services. It's also an incentive to users and contributors to boost the usage of flash loan services. It will also be used for funding for the protocol. Flash loans are a must in DeFi in my opinion. There's several different use cases for flash loans. The first is arbitrage. So say for example you see a price on one DEX and a price on another DEX, you can actually take a flash loan to arbitrage the difference. So let's say for example it's $1 million arbitrage opportunity. It's $1 million for 100 ETH tokens here, and it's $1 million for 110 ETH tokens here. what you can do is you can get a flash loan in order to get the 110 ETH here, sell the 100 ETH here, profit the 10 ETH, and close up the flash loan. That is a way you can partake in arbitrage. Whereas normally, if you didn't have $1 million, you wouldn't be able to do that. The next is liquidations and self-liquidations. Say there's $1 million worth of, I don't know, Bitcoin or wrapped Bitcoin that needs to be liquidated because the vault's underwater. Well, I don't have $1 million to go buy that Bitcoin and then go sell it and repay the loan. I just don't have that. So what you can do with a flash loan is you can put up collateral in the same transaction, borrow $1 million against it, repay or liquidate that one guy to get the Bitcoin, and still in the same transaction, take that Bitcoin, sell it, and repay the loan and profit the difference. So that's how it can be used for liquidations and self-liquidations. You can also use this for collateral swapping. Say, for example, your health factor is way too low for comfort, and you want to make a quick swap without having to unloop if you looped on Aave or on Compound, and you can simply just swap your collateral. Let's say, for example, it's Bitcoin to USDC in an instant. You can also do loans refinancing. So if you're paying 10% on your stablecoins here, you can automatically get a flash loan set up to where it brings it onto a different platform like Compound. And you can do that all in one transaction to make it easy. And you can also do flash minting. Flash minting will be used for different arbitrage opportunities. So I really like the way Equalizer Finance is developing a platform that allows you to partake in flash loans and profit from flash loans in an easy way. Now, time will tell if this gains market share, but I do like the concept. But in general, I like the platform itself. If you guys want to learn more about this project, make sure you guys check out their YouTube channel right here, DeFi Flash Loans Made Easy. And they have a couple of introductions, how to use flash loans in actions, use cases, just different things you guys can learn from the platform itself. Thanks for tuning in, guys. I hope you guys enjoyed the video, and we'll see you guys in the next one.